From Barangaroo Studios, the ausbiz COB is the key stuff you need to know about the day in business and finance.
Thursday, the 26th of October, moving right along through this month and this trading week. About the day that was, Jules, what are your takeaways?
Well, I think when we woke up and saw what had happened on Wall Street with those big tech players, so even with Meta being a bit of a beat, its shares fell in after hours trade, and then of course you had Alphabet very much under pressure. We knew it wasn't going to be a good day, and certainly that seems like what we've seen.
It's been a rough week, actually, I'd say. If we take a look at where the COB Australia Index has closed, as the last of the day's trades go through the S&P ASX 200, pretty negative, down by about 0.7%. But to your point, tech was the real heavyweight on the local market.
We've got Megaport down something like 18% on the close. So that is very much where you're seeing a lot of the weakness. But, you know, it's pretty hard to find any sector higher today.
No, and then you throw into the mix the fact that we've got a real fight on our hands when it comes to inflation. Not only did we hear that from our own central bank governor, Michelle Bullock, today, of course, who was fronting that an economics committee, Senate Economics Committee, I should say. But even if you put it in global perspective, I mean, yes, the Bank of Canada, for example, did leave rates on hold overnight, but they said that there's a real risk of inflation, you know, running away once again.
Very, very hot inflation, and we saw that in the CPI data yesterday. And Michelle Bullock we've heard from twice this week. So we heard before the CPI print, and then we've heard after, when she said that she's still very wary of it. And of course, as she said several times, they will not hesitate to raise if they feel like they need to.
And Westpac's changed its view as well. So it was the one holdout yesterday in the wake of that inflation data. But today now expects an interest rate hike to come through on Melbourne Cup Day, and that's with Lucy Ellis leading the economics team, and of course she is former RBA. Yes. So quite an about face there. We've talked about that tech tumble, but in part, you know, you talked about it, US earnings, but we've got, you know, more US earnings tonight. We've got Amazon tonight. For us locally to keep an eye on, we've got ResMed quarterly as well.
Ooh,
we know what happened
last
time around.
Yeah. And as you've highlighted as well, the ECB looming, so a hurdle for a rate hike there, potentially high as well.
All right, so that is setting the scene. Just to get you across some of the numbers on your screen, the All Tech Index, the Infotex Index here, I mean, Block down by 8%. Some would just put that to the side regardless, but WiseTech Global down by 2.2%, and that's been a consistent outperformer, as well as, you know, the quality tech everyone touts. Technology One down by close to 3%.
Having a look at the real estate REITs, I should say, because this is, of course, interest rate sensitive as well. They were all lower. Stockland off by about 2%. GPT down 2.6%. Mirvac off by 3.2%.
And into the telco space, often a little bit of a defensive area of the market. Aussie Broadband is up by about 1.7%. But I do think it's worthwhile pointing out that there were 10 of 11 sectors lower today. Consumer staples was one such sector, and utilities was the only sector with a little bit of positivity. Again, usually seen as a bit of a defensive area of the market.
And we just had a flip there of Coles. Its share price was actually higher. Actually, that's probably coming through in our top corporate story. So hold on, we'll tell you about that in a second.
Go ahead. I'd like to learn. We had Woolies yesterday, I suppose.
So both Coles and Woolies seeing some of these food inflationary pressures easing somewhat. But what I thought was really interesting about Coles, and I'm stealing this headline from the Sydney Morning Herald, very clever. Remember that ad that used to say prices going down, down, down? Well, apparently shoppers are trading down, down, down in terms of looking for more budget-friendly products. So they're swapping the champagne for the Prosecco. They're swapping some of the higher-end, you know, potential bread bands for the local Coles brand, and Coles did see its sales up by about 4% on the quarter.
Yeah, interesting to note, you know, market darling, you know the trope, one of the best run retailers in the world, I'm told time and time again. JB Hi-Fi updated the market, dropping more, well, at one point it was down by about 1%, slowing in sales. So that's, you know, that's the first time we've seen slowing sales there for quite some time. And just Juliet, I've called you every version of that name today. My brain's slow.
No. But Azure Minerals there, up 44%, and this is on this $1.63 billion sale to Chile's SQM. So, of course, just continuing on this hot lithium movement.
And in Street Talk, you know, we've got to talk about the chatter out there. The Fin reporting that Gina Rinehart is looking to spoil the bid for Azure Minerals. So we've got apparently Gina Rinehart looking to creep up the register there is Euroz buying stock at bid levels in Azure. And so interesting. I mean, she's obviously got quite a lot of cash to splash around. We know, richest person in Australia, because she's also, taking her power to Liontown Resources at the same time. So really interesting to see those market dynamics in M&A for some of these mineral plays coming through.
All right, Pilbara Minerals, they're down by 1% on the close. And what else did we have in terms of some of the company news? Well, of course, the Westpac coming through today, and that was really interesting in terms of, was it 173 million?
Write-downs coming through. But it's everything from customer remediation, I think, and restructuring and everything else. So that was the stock of the day. Let's see what our expert guests had to say.
My point of view, when all I could expect is a negative return, why would you want to own it? Yeah. And plus, they've got a lot of headwinds going forward, as you said, with potential insolvencies. There's a whole range of stuff that hasn't hit yet.
It's the one that if you're going to be in a big bank, CBA has a proven track record. It's a strong bank. It's a strong performer. It's a leading bank. Right. Westpac, not so much. I'm actually just awaiting the full results out on the 6th of November, because then you can kind of dissect exactly what's going on. Today's obviously a $173 million hit to the profit. It's not as bad as last year. Last year was $874 million hit to the profit. But again, big banks aren't where I play.
Let's bring in our special guest,
shall we? Fraser McLeod from Shaw and Partners joins us, and just having a look in terms of some of your bearish and bullish calls on the market. We've been talking so much about lithium, but uranium, Fraser, also a very hot play.
Yeah, very hot at the moment, uraniums, and probably not paying too much attention to the macro, which is good for those who are long uranium equity stocks. But I think all of us are. Quite tempting to almost watch your screen and sit on your hands. That's probably why there are lower levels in recent weeks of volumes going through markets, because many investors and many generalist investors just simply can't decide which way to jump on this market. So we've got the real true hard to ignore bearish points of longer term yields really starting to bite, and that sort of higher for longer narrative it's almost just turning into the medicine that we just can't stomach anymore. So that alongside oil prices going up, that's bad for markets in general, unless you're in energy directly reaping the benefits there. And this deglobalization trend, the fact that geopolitics are looking at a bad place and getting worse, and you only need to look at the White House and the more ramping up of restrictions towards China and what tech they're able to access or not. And then on the flip side, well, maybe some of the comments you could kind of say, well, Powell was perhaps being a little bit dovish or more than he had been in the past, reading between the lines. And we even in Australia and overseas, we have these consumers who seem to just keep buying, especially if you're older and you're not in a lot of debt. And so we have this no landing or soft landing narrative, which is alive and well. And if you were around as a broker advising clients, back in 2009, 2010, you just can't write off China. You can't write off stimulus in China. They've got plenty of levers that they could pull at any moment, and then suddenly you're off. It's also been a very, 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 very crowded market on defensive. So a lot of the defensives kind of look really expensive, and a lot of the stuff that really should be holding all of that cyclical risk is probably looking quite cheap. So in some resources names, like the uraniums, you might see a lot of generalist money come flowing back in really quite quickly. On the uranium names, if you want me to write them up.
Yeah, definitely. Please tell us what you're interested in.
Look, so we have been very active over the past few years, and many years ago saw that the uranium market was completely washed out, and ultimately, if you scratch your head and look at the numbers, and well, this is uranium was not dead. There are plenty of nuclear power stations in the world. They're not going to be turned off. Fukushima was more than 10 years ago. the Chinese are building out an enormous amount of new nuclear power stations. They're all going to have to be fueled. So on one side, the demand side is very, very easy to recognize. There's no getting away from it. The demand is definitely there. It's definitely growing, and it needs to be fed. Where it's going to be fed from, however, because there's been no investment in the industry, in the whole sector over the past 10 years or more so, well, that's becoming a real problem. A real problem if you're a utility, you need that guaranteed supply, and you'll pretty much be forced to pay up for it. Now, there was lots and lots of uranium, lots of fuel that was sloshing around in market over the course of the last few years. That kept prices very, very low, pretty much artificially low, and utilities just gorged on that. So they had long-term contracts. They had the ability to be able to increase volume on those contracts without affecting the price that they would pay. But and they have done. But the price that they are now paying is, well, where are they going to find that new supply from? And they can't find it. So what we are finding, what is moving the uranium market in terms of everyone looks at the spot price. The spot price is a guide only. 90% or more than 90% of the true volume that is burnt within nuclear power stations is contracted. Where do you get your contracted supply from? Well, it has to come from new miners somewhere. And the real names that are going to be able to pretty much definitely contribute towards the next cycle over the course of, say, the next year or 18 months on providing that supply. There's a tiny amount of names in the world that of listed names in the world that are going to be able to supply those volumes of new uranium coming onto the market and being contracted. Names like Paladin, which has had a great run over the course of the last couple of years and is running away again. Now we value that stock at about $1.10. Now they own 75% of the Langer Heinrich mine. It is probably the most liquid name that you can get on our market here in Australia, with the biggest market cap. It's high quality, well produced, great management, and they're on budget. Their balance sheet is very strong. We had a couple of capital raisings following quite close to the story, but they were pricing in $90 a pound uranium in recent times, but they've got plenty of other projects that they've yet to develop as well. So we like that one a lot. Remains a buy in our eyes. Then you've got you can buy exposure to NextGen. Now that globally is becoming a well-known story, probably less so here in Australia, but they do, over the past few years, they have their CDI, so they have effectively a secondary listing or third listing. They're listed in New York. They're also listed as a Canadian company. They're listed on the Toronto market. Much bigger volumes go through there, but we do have our CDI, which is under the code of NXG. Now, that's probably the most exciting project when it gets off the ground. They are still awaiting the final federal Canadian environmental permitting. They've made a very, very good job over the past few years of taking the Indigenous population with them in order to get that one on track. It certainly is on track. It's a massive project, very low cost. The payback on this one is within 11 months, and the free cash flow figures are in the billions of Canadian dollars. They could produce, once they're up and running, they could produce 10% of the world's global need for uranium. So watch the space there. Then we've got old names that did really, really well in the last bull run, over a decade ago. Stocks like Bannerman. You see them starting to really flow at times when the spot price is now really knocking on the door of $75 a pound. And then probably the darling of our market over the course of the last few months especially, and really has been leading the pack, has been a name like Boss Energy, which is obviously the Honeymoon project based here in South Australia. Their valuation maybe got a bit ahead of itself. They'll probably grow back into that valuation down the track again. They were pricing in a very high price of uranium for the current valuation, but I think it's going to take a while. But once those generalist investors, and it's probably happening now, once those generalist investors come back into the market, it's such a small equity market, which makes it so exciting, because you only need a little bit of global generous money to come back in, and suddenly those market caps just shoot on the upside.
All right, Fraser, thank you so much for joining us today. Uranium drumbeat, you've been beating it for a while, and look, you're getting more and more on board. All right, see you, Fraser. Be well.
Thank you. Bye-bye.
Okay, so when we think about tonight, it is a big one, but before we get there, market leaders and laggards, and let's see, IDP Education Super Retail, that was on the call the other day. Quality retailer again, always mentioned as such.
Yeah, and there was a broker upgrade for Super Retail today. I cannot remember which one it was, but there was definitely a broker upgrade for that company. And Coronado Global Resources offered in there, it's up 2.4%. Let's have a look at the laggards.
Yeah, Beach, I was just going to point out, it had its quarterly yesterday, and the brokers out in the wake of that. So Megaport, you mentioned it earlier. Look, it's interesting to note we've got a broker out saying that it could still beat its FY earnings expectations. Coming out today from Citi, saying that its strong margins suggest potential for the communications tech provider, saying that its first quarter customer growth was weaker, though, than soft forecast, but reckons that currency moves could help the company beat its $190 to $195 million revenue guidance. That note in the commentary, not enough to help it today.
No, and just looking at those laggards now, Megaport, as we mentioned, on the weakness that you saw in the US tech space. So it was the worst performer on the market today, set down 17.4%. Block, we mentioned, also being dragged lower.
Bank of Queensland ex-div.
Bank of Queensland ex-dividend down at 5.3%.
So, small caps? Well, I didn't present the small caps today. That's usually where I get a little bit of my info for this segment. But
Andrew did. Should we bring him in?
Yeah. Cricket's out there.
Invictus Energy up 16%. Playside Studios up by about 13%. And a quick look at the laggards there. Dreadnought Resources down 8.8%.
Okay, so when we think about tonight, what's to come tonight, we always do that first. We've got the ECB. We do have jobless claims coming up tonight, and what was sort of the pièce de la résistance so far this week in the States, we've got the GDP read coming through as well.
Yeah, definitely. That is the key one. The US quarter GDP read, jobless claims as well, durable goods orders. You've got a number of companies coming through with earnings as well. Amazon, Ford, Intel, McDonald's, Merck, MasterCard, UPS, and we're just having a look there on the screen about what we should look out for tomorrow and over the weekend as well with those China industrial profits for September.
I think it's worthwhile to note, though, on the corporate front, we do have a few things happening here today as well. We've got the car sales AGM that's happening. We do have Fletcher Building holding its AGM. We've got a whole heap of smaller earnings report, including Vulcan, but we mentioned it off the top. We do get ResMed earnings as well. So it's been such a divisive stock. Obviously, it's seen exponential selling, a lot of which is being attributed to Ozempic, those weight loss drugs. But then there's those that we speak to who say it's just a screaming buy, when it's sold off to this extent. So we'll get a little bit of color on the bones.
You cannot get away from this Ozempic narrative. Danny and I talk about it daily, but I was talking to Ted Alexander from BML earlier today, and he was telling me one of his friends is on it, but it hasn't stopped him, because I asked him the impact of the consumer stocks. Coca-Cola is sort of putting it in their outlook now. Kellogg's has said as well. Walmart has said the impact. He said, look, this person might be eating less, but he's still downing the pints. He said he was an ausbiz viewer and he'd know who he was. So maybe it doesn't affect some of those consumer stocks as much as we think.
Oh, well, there's one that's very live anyways. It's the new AI in this reporting season for a lot of companies as well. Although AI is still featuring, and cloud still featuring a lot in these tech reports, of which we'll get Amazon tonight. So that's a big one that we'll be talking about tomorrow when we're live on air. If you did miss any of the interviews today that we've done, we'd hope you could go online, ausbiz.com.au, and you can always check them out in catch-up form.
Yes, indeed. We'll see you tomorrow.